Some expats, when they're living abroad or working overseas, might be working for a US-based employer, either working remotely or perhaps there's a foreign office. What are the implications of that from a tax perspective?
Regardless of where you live or where you work, you do have to report your worldwide income and potentially pay tax on that. For most employees, when they're living overseas and they pass either the physical presence test or the bona fide residence test, they can claim the Foreign Earned Income Exclusion that allows them to exclude up to a certain amount of their income. However, that does not apply if you work for the federal government. If you work for the US federal government, you're not allowed to claim the Foreign Earned Income Exclusion. Also, if you're an employee working overseas and you have to pay local taxes, regardless of whether you work for the federal government or not, you're able to claim the foreign tax credit. So what the foreign tax credit is, that's when you pay tax to a foreign country, income taxes specifically, and you're able to use those amounts paid to reduce the amount of US income tax that you owe. In addition, there's the question of whether or not you need to pay the Social Security and Medicare tax. So in a lot of instances, you're paid under a W-2. And in that case, you're working for what's defined as an American employer, so you are subject to that 7.65% withholding for Social Security and for Medicare. There could be other instances where you're in that host country for an extended period of time, and then therefore you do have to pay a Social Security equivalent to that local country. If you do find yourself in that situation, you might be able to take advantage of what's called a Totalization Agreement. Totalization Agreement is an agreement that the US has with a number of different countries involving a Social Security and Medicare type withholdings. That means you can pay to just one country and not the other, so you're not paying into both systems based on your income. As a W-2 employee, you are generally allowed to take the Foreign Earned Income Exclusion to help reduce US taxes. Unless you're a federal employee, you're also allowed to claim the foreign tax credit, regardless of whether you are a federal employee or not. And in general, you do pay that 7.65% in Social Security and Medicare, which does give you additional credits and benefits for Social Security and retirement once you hit age 62 to 70.